Transparency has been one of the biggest asks from ESG investors. But just as the ESG movement has gone mainstream, are investors jumping ship? Pippa Stevens is here with a look at the changing tide, Pippa.
And Kelly, you've been following this closely. Enormous attention on ESG and massive inflows into the space. But in May, we actually saw a reversal with investors pulling money from global ESG and sustainability-focused ETFs. This, of course, comes within the broader market downturn, but it's still notable since it's the first month of outflows in years. And performance for the group has been subpar, in part because many exclude energy stocks, which, of course, is the top performing group for 2022. Just 18% of actively managed sustainable funds are beating their benchmark this year. That's according to RBC. And that's compared to 44% of traditional equity funds beating their benchmarks. Two of the largest funds, the Vanguard ESG ETF and iShares ESG Aware USA Fund, both down sharply this year. Now, John Hale from Sustainalytics saying this all comes down to broader market dynamics, which are driving outflows. But with growing regulatory concerns around ESG and outspoken criticism from the likes of Elon Musk, it does, Kelly, beg the question of, have we seen peak ESG?
I mean, what do you think in terms of the regulatory tide? I wonder if it would take a Republican administration or leadership of the SEC to start really aggressively pushing back against some of this. Otherwise, it seems like it's continuing to gain adoption and gain steam.
Well, Chair Gensler is certainly trying. He said that it's really important for investors to have comparable and consistent information when they're looking at different asset managers. But I think another thing is that just like we can't lump ESG and sustainable funds into one category because there are so many definitions, we also have to differentiate between performance. So there are those funds that are focused on how do ESG metrics impact financial performance, and then funds focused on actually trying to do good. Right. And it's that latter category that we've seen funds yanked from, in May and this year. And that's because, when the economy is potentially going into a downturn, you don't want to sacrifice any type of performance. And so the ones that are thinking about ESG in terms of financial risk reward are the ones that are holding up better than the more impact investing category.
Very interesting. Pippa, thank you.